overarchingly, what we're focusing on now is this kind of institutional market. We have an amazing track record as a protocol and an amazing brand, and as one of being the most secure and the most permissionless, and having fantastic liquidity on chain as well, which has been steadily growing during this cycle, which has been really great to see. So I think focusing more specifically on this market, talking to the institutions and understanding what their kind of product suite, their desirable product suite looks like, and building and designing things that can facilitate their outcomes on chain and otherwise, and making sure that we can lay the foundation for the liquidity base for the Bitcoin economy. And I think this is the stage that we've kind of realized. We've had the buy-in from institutions, the validation of Bitcoin in the mainstream, and then the products are going to just kind of exponentially grow on top of this liquidity base over the next 5 years.
We've already covered a threshold and TBTC. Would love to do a deeper dive this time. I think the biggest problem for getting wrapped version of Bitcoin in DeFi is liquidity. So what have you learned about kind of bootstrapping this problem?
It is a big problem, and I think bootstrapping it can come in a few different forms. There's the kind of traditional DeFi path of token emissions and paid for liquidity and things of that nature, which can be really expensive. And I think as well, for a project that's trying to facilitate Bitcoin finance generally, spending a large budget on the liquidity side is not really a viable long-term strategy, because you're paying your revenue to produce your products, and it's quite expensive. So really, like, the best way to do it is to enable an ecosystem and have other players come in, and their profession is on-chain market making or liquidity provision in some way. And rather than paying them out of pocket for it, they're generating their own revenue from it, from their own balance sheet or from a loan or something like this. And I think bootstrapping in these kind of ways is much more viable for the long term, because you have token emissions and eventually they'll run out, or the token value depreciates, or whatever it might be, and you want to have a long-term sustainable option. So figuring out how to create these venues where professionals can come in and facilitate these markets, I think has been critical for us. And then the question is, like, once you have the expertise, where does the capital come from in order to provide that? And that's another amazing part of DeFi, is this like permissionless capital flow, in a sense, that you can have the entire contractual arrangement between you and the market maker dictated by some kind of vault product or some kind of deposit venue. So you take your TBTC, deposit into the vault, and to the user it looks like a yield product, but under the hood you're actually facilitating liquidity on chain and ensuring that the entire Bitcoin economy can function.
Can you give more details on how you're doing that?
I think that's kind of one of the main strategies, is firstly, like, working with professional market makers that they know their business, they know how to make Bitcoin liquidity work on chain and off chain as well in some venues. So that's a big part of it, is having professionals to maintain a highly efficient market. And then the other side is this capital allocation piece. So making sure that we have endpoints and user journeys that allow people to deposit into these venues, that manages the complexity of concentrated liquidity management for them, and then returns a simple user experience where they're generating more yield with their Bitcoin, and at the same time having the double whammy of facilitating Bitcoin finance generally.
Let's talk about TBTC versus WBTC, which is, I think, kind of the big competitor. Right now, I saw this morning you had around 600 billion of TVL, according to DeFi Llama.
That's 6.3 thousand Bitcoin.
WBTC TVL is in the billions. Do you think, even if we are in crypto and DeFi, are some players still hesitant to use a more decentralized, permissionless option like TBTC? I understand you know, the difference is that you have a 50 of 100 multi-sig bridge. WBTC obviously holds Bitcoin in centralized custody, so that's a big difference there. Why do you think a more decentralized option like TBTC hasn't? Well, you have very decent TVL, but not as big as WBTC. Why is WBTC still ahead?
Yeah, certainly. I think centralized custody can provide different security guarantees to decentralized custody, and that you have different risk profiles depending on the liquidity provider at the end of the day. So we have like this very crypto native kind of audience. They're familiar with, permissionless bridging, DeFi generally, and that's where they want to, park their capital, and they prefer that decentralized model. And then you have the centralized custodial model, which is closer to TradFi, has more of the security and legal guarantees that TradFi might have, and it's much more familiar to these kind of mainstream asset managers. And I think we're in a position where we're actually highly flexible, and we're working on solutions that can integrate ultimate custody mechanisms into the TBTC protocol as well, which I think will facilitate capital flows between DeFi and this more TradFi oriented audience and kind of broaden the whole ecosystem. And because Threshold isn't tied to a particular custodian like a BitGo or a Coinbase or something like this, I think that we're in a position where we can actually span some of these custodians and create more efficient connectivity between these destinations as well. So I think that that purely decentralized custody certainly has its place in this demographic as well. But then also being kind of realistic or listening to the market in terms of where the majority of capital flows are. And I think WBTC has done really well to capitalize that and serve that market, even though, recent kind of custody disputes have made things a little bit more challenging for them, or not disputes, but changes to their structure. So I think there's place for both, but certainly where the majority of institutional capital flows are right now is having some kind of qualified custodian, and Threshold is building for that reality.
What custodians are you looking to work with?
I think it's early to say. All of the kind of major names that are out there are conversations that we're having at the moment. So I'm not going to pinpoint anybody specifically at this time. But I think having these kind of security guarantees provided by a centralized custodian is going to be an important part of enabling the Bitcoin economy at scale.
Do you see that TBTC will provide like a dual model going forward?
Yeah, there's going to be some kind of hybridized solution. The details still to be kind of announced. But we think there's going to be a solution that can kind of span both sectors.
Now, about kind of the use case itself of using Bitcoin in DeFi, where do you think we are in adoption? Do you see DeFi users are ready to use Bitcoin as collateral? Do you see Bitcoiners are more willing to use DeFi, or what are kind of the blockers to like broader adoption?
It's interesting. I think we're taking a big step back as an industry, and I don't mean like a regression, but I mean we're just assessing from first principles again to some extent. And there's been this big retail focus, like the 2020, 2021 kind of NFT cycle and DeFi summer and all of this, and a lot of that was retail heavy, like people getting in and really getting their hands dirty. But people have kind of stepped back from that, I think, and we're focusing more on this kind of institutional market now, because we've kind of got to the point where institutions more broadly are considering Bitcoin and other cryptocurrencies as legitimate assets and tools for finance. So now that there is this interest, we're kind of laying the foundations for this institutional liquidity, I think. And having these deep liquidity and also better user experiences facilitated by centralized products, I think will facilitate the broader onboarding of the retail sector. But right now, I think we're kind of building the fundamentals of institutional liquidity. So I think in terms of like the market segments, the Bitcoiners, the really hardcore Bitcoiners, I think the conversation is progressing, and we're going to start to see some of these new companies. I think that the DAT, the treasury companies, are actually a big part of this, because you have new capital entering, and you also have new people at the head of these companies, that they're not the kind of hardcore Bitcoiners that I think people who've been in the industry for a long time might relate with on that sense. So these people that are coming in, they're seeing it more from a business perspective. They're not seeing it quite so ideologically in terms of Bitcoin in its nature, which I think has its own pros and cons. But the idea that these new perspectives are coming in and they're trying to be a bit more pragmatic from a business perspective, I think that they're going to look for ways of generating yield with their Bitcoin or revenue for their company, or doing something in addition to just being a treasury. And so these larger capital bases are going to start to look for options. I think DeFi is going to be the obvious choice for that because of the security guarantees and transparency, automation, and reduced friction. So having these conversations and figuring out how to migrate this kind of new demographic of Bitcoin interested parties into DeFi and helping them to facilitate better outcomes for their client base or their shareholders. So I think DeFi will be a big part of that. And as they move across, I think that the entire narrative and the level of comfort that the more old school Bitcoin space will have with generating yield and seeing these outcomes and seeing products like Threshold, which has been around for 5 years and hasn't had a security incident, that kind of impression will start to rub off on this other side of town and become more normalized to use your Bitcoin. But practically speaking, today on chain, people use Bitcoin as collateral. Like, we think we have something like a third of our supply in Aave borrowing USD, for example. And this is a very viable yield strategy for people with their Bitcoin. Relatively low risk. You can have neutral strategies and hedge strategies and things like that that will enable people to generate yield without taking on too much risk. And I think that's very popular, and we're going to see that, you know, continue to grow and scale as the strategies and the user experiences become finalized and go to market.
I think the point about that is a really, it's a great one to take into account with how Bitcoin will continue growing in DeFi. What do you think these new players in the ecosystem are looking at when, considering whether to deploy their capital in DeFi? So, you mentioned a qualified custodian is one. Are there other kind of requirements that you're seeing?
I would say like a very low risk profile for these companies, like either being a listed entity, they have particular regulations that they need to comply with, or just, coming from a more conservative treasury perspective. I think, DeFi and crypto treasuries generally behave with a different risk tolerance. So I think, maintaining that level of risk and making sure that principal is protected and that there's not some kind of black swan they're exposing themselves to. Because especially when you're talking about Bitcoin, there's nothing safer than having your Bitcoin buried in the ground on a piece of metal or something like that. I mean, it's not very practical. But from like perceived zero risk of owning Bitcoin to any additional risk, and then the time horizons that people are kind of making their Bitcoin investments on, it doesn't make sense to people to take on like whatever margin of risk for 5% yield, and even higher yield would actually put people off as well because they're kind of nervous of these crypto numbers. So making sure that there's something that is communicated very clearly, is very transparent, has all of the risk modeling in place, has the regulation in place and compliance, and doesn't introduce primary risk on their Bitcoin. I think these are the kind of things that are going to be interesting and will move the needle for these DAT companies, because I would expect them to be quite conservative.
Right now, are you having conversations with these companies, or is it still more kind of something that's down the line you expect to happen, or people actually like about to start deploying their Bitcoin in DeFi?
I think like the conversation is starting, but it's not quite to the point where a full DeFi strategy would be appealing to them. But I think this is the time where these companies are navigating their first year essentially as well, many of them outside of MicroStrategy's. And seeing how the market impacts these companies generally, I think will be important, given that we're in this Bitcoin bull market and they've all kind of jumped on board. And I think we're yet to see whether, the floor price for Bitcoin has been established by institutions, or if we're still in the same cycle that we've kind of been in since the inception of Bitcoin. And the next few months, I think, will be quite telling in that. If we see new Bitcoin highs pushing into, Q1 next year, then maybe we're in a new cycle. But if we see, prices drop off and the peak happening now or in the next few months, then perhaps it's going to regress and these DAT companies might go through a bit of a bear market themselves.
And at that point, it'll be more likely that they'll be looking for additional sources of yield.
I think so. I mean, from a sustainability perspective, how are they going to, pay for their overheads if there isn't any revenue being generated? And there's a number of different options available. But if you're sitting on this large principal and there are options out there, then doing some kind of like risk managed internal portfolio allocation in terms of the Bitcoin on their balance, it would make sense to be generating some income from that and creating a suite of products, at Threshold that would be viable for these kind of companies, I think would be in our best interest.
And then so we've talked about your profile that's a lot more decentralized than something like WBTC. How does that influence how you handle governance? Like, is it also more decentralized? Is it more DAO based? I also understand you recently had an important governance decision. If you could like go through what that was.
I think from a governance perspective, we're much more decentralized than any of the other wrappers out there. We have an established DAO, we have a token holder base, our token is fully emitted the T token, and it's traded on all of the major exchanges. And our governance is fully transparent on chain. The decisions are all made transparently by the community, and the kind of contract ownership itself is managed in this tiered structure by the different, well, actually there's one committee now. It's called the Threshold Committee, and it has an elected kind of risk council that manages some of the decision making for the DAO. And then T Labs, which is the company that I co-founded, is contracted to the DAO to provide growth and development services of the protocol, just in the same way that you have, many of these foundation companies or something like that providing services to the decentralized protocol. And I think this is the best way to go about it, is having centralized execution and decentralized governance. So the decentralized governance gives you all kinds of security guarantees in a very practical sense of the on-chain security. We don't have a single point of failure in the system. There's not just a way that somebody can come in and rug the Bitcoin or rug the governance. Like, we have this procedure that's in place. And that goes down to the network level as well, like how the nodes are operating to maintain the decentralized custody system. It's all kind of underpinned by the T token and the decentralized governance mechanism. And through that kind of process, we've also found that DAOs are not so good at the execution side of things. So ensuring that there is centralized execution when it comes to managing the product or managing the growth strategy. And proposals on the forum, like there have been a number. I'm not 100% sure on which you're referring to specifically, but there was one recently that was a proposed tokenomics upgrade, which is an interesting mechanism where we get to leverage some of this decentralized infrastructure that we're using, where you could have the T token and stake the T token, and that basically giving you a rebate or a fee rebate on the bridging cost of redeeming TBTC. And I think this is especially of interest to market makers, as we were discussing. If you have like a liquidity pool that you're managing two sides of, and for whatever reason, all of the TBTC gets bought out of that market, in order to rebalance the TBTC, you can redeem, or the other side of the market is bought out, and you needed to redeem the TBTC back to Bitcoin in order to buy another asset or transition it to the other side of the pool or something like that. You can do so without paying the 20 basis point redemption fee. So it facilitates people using the product from a professional perspective, and they get special treatment in terms of fees, and that will allow them to have much more efficient services that they can provide on chain. And I think these kind of like small mechanisms is like a small piece of utility. It's not designed to make the token pump. It's designed to make the system more efficient and more palatable to those people that want to use it. And I think this is the key thing that we're aiming for in terms of building the Bitcoin economy, is making ways for people to use Bitcoin really efficiently and making sure that the product has utility, that the token has utility within that system.
Are you considering other kind of token incentives, maybe not for market makers, but for depositors or holders of TBTC?
Yeah, I mean, we have run quite extensive incentive campaigns in terms of liquidity bootstrapping, where we've used T tokens from the treasury, kind of in your standard liquidity mining kind of bootstrapping. And like I was saying at the beginning, it's kind of a short-term strategy to bootstrap, and then once we have this critical mass, we can transition to these other models, which we're really focusing on at the moment, because paying for liquidity is kind of a short-term approach. But in terms of like T token utility in itself, it's very open and flexible at this time. Like, it's a utility token, it's a governance token. It has this kind of practical governance use within the Threshold ecosystem. And we're exploring all of these other things that you could do with the token as well, like staking or kind of guiding the revenue of the DAO to gauges, something like, a curve-esque model. These are just kind of ideas that we're floating around right now. And I think the most critical thing for all crypto projects and in this moment in the industry is focusing kind of on the business fundamentals and not focusing as much on the token mechanism out of the gate, and saying like, let's build the business, let's make sure that people are using TBTC, that the DAO is generating revenue sufficiently, and when there are revenues in place, then we can grow and allocate as would make sense for any project to be doing it at that time, considering the cost of running everything. So I think that's where we're at Threshold, is making sure that Threshold DAO, and T Labs has the funding it needs to continue to operate and grow TBTC, and then establishing, this kind of stronger and deeper war chest of Bitcoin as a protocol that will kind of create the longevity for the protocol long term. So I think that's, trying to take a really sound approach to how we're thinking about Threshold as a business ultimately.
I'm very happy to see this move towards just business fundamentals, getting, sustainable revenue, getting, profitable protocols, not relying just on token incentives for people to come, but like delivering something that's useful. So yeah, great to hear. And to wrap up, what are kind of the next milestones or projects within Threshold that you're excited about?
Yeah, I think a number of the new chain launches that we've been a part of have been very exciting. But I think overarchingly, what we're focusing on now is this kind of institutional market. We have an amazing track record as a protocol and an amazing brand, and as one of being the most secure and the most permissionless, and having fantastic liquidity on chain as well, which has been steadily growing during this cycle, which has been really great to see. So I think focusing more specifically on this market, talking to the institutions and understanding what their kind of product suite, their desirable product suite looks like, and building and designing things that can facilitate their outcomes on chain and otherwise, and making sure that we can lay the foundation for the liquidity base for the Bitcoin economy. And I think this is the stage that we're kind of realized. We've had the buy-in from institutions, the validation of Bitcoin in the mainstream, and then the products are going to just kind of exponentially grow on top of this liquidity base over the next 5 years, something along those lines. So yeah, super exciting times to be positioned here and enabling the capital flows and building the Bitcoin economy. And yeah, hope everybody can stay tuned and watch our progress as we go.